In this presentation, we're going to continue on with our adjusting entry related to an invoice that was entered into the wrong period. We laid out the problem last time. Now we're going to enter the adjusting entry this time. Let's get into it with Intuit's QuickBooks Online. Here we are in our Get Great Guitars file. We're going to open up our reports once again. We're going to go down to the reports on the left side. We're going to open up our balance sheet report and our income statement report. So we're going to open up the balance sheet. We're going to scroll up top. I'm going to be changing the dates. I want to include March here. So I'm going to be including March. I'm going to go back up top from 0101. Let's just make it for March. I'm going to actually make 030120 to 0310. Let's say 20. Then we'll run that report. So there it is. We're going to go back up top, right click on the tab up top and duplicate it. Then I'm going to go back to the tab to the left. And we're going to open up the profit and loss. So I'm going to go down to the reports once again. We're going to open up the profit and loss, the P and L, the income statement. So there it is. We're going to be changing the dates up top. So I'm going to scroll back up and change the dates. And just for March now, 030120 to 03, let's say 1020, and run that report. Then I'm going to duplicate that tab, right-clicking on the tab up top and duplicating it. Now you'll recall that we entered an invoice up top. So we entered the invoice and it's in the wrong time period. So now we got to take a look at that invoice and we need to pull it back into the prior time period. We're going to do that with a journal entry. So there's really, I'm not going to be able to avoid the debits and credits here because there's going to be multiple accounts as we've talked about whenever we created a journal entry. So this is really good practice to kind of see the journal entry, the accounts affected, and the debits and credits related to an invoice with inventory, because we need to figure that out so that we can enter that into the system as of the end of our cutoff date or before the cutoff date or as of the cutoff date, which is March or February 29th. So let's go ahead and open up the invoice. What I'm going to do is I'm going to go into the sales. I'm going to say, hey, look, this invoice, that 1023, is in the wrong time period. I'm not going to delete the date. I'm going to keep the date as is. What we're going to do is do our adjusting entry related to it and then a reversing entry for it. So if I open this up, then I can scroll down and think about what's in there. I can pull what I can from this invoice. So now I'm going to open up Excel and just think about this journal entry. Okay, so we're going to have to do this in kind of debit and credit format here. So here's going to be the debits and credits. So I'm going to underline this and underline and center it maybe. So this is basically the journal entry that we have. The accounts that we know that are affected with an invoice are accounts receivable. We know that goes up. The other side is sales, right? For the product sales, I won't put the rest. And then the difference between between those two, let's put the sales down here. Sales is going to be the payable. That's going to be the sales tax payable. All right. So if we look at that on the invoice, we'd say, okay, what's going to happen here again? The invoice is going to go up, or the accounts receivable up by the $1,423.50. So 1423.5 is going to go up in the AR. The sales are going to go up by what we get to keep, 1,300. I'm going to put that with a negative number for the credit, 1300. The difference is going to be the 123.5 or the sales tax. So negative 123.5. There's the difference. That adds up to 0, or the debits equal the credits there. And we can indent the credits if we want. We also know that there's another side to it, meaning inventory goes down and the cost of goods sold goes up. And so I would think of that as a separate kind of journal entry typically. So if I go back over here, can't see that on the invoice, I can close this back out and I can go back up top and say, well, I can check out the account to find that. Let's go into the cost of goods sold account. And we can see there then that amount was for both of these are the same invoice, so the 1,040. So that's going to be 1,040 and the 1,040. So that's going to be our amount. Now you could think of this as basically two journal entries kind of like this and basically enter them in as two journal entries, or just one journal entry that you can put in place. So let's actually do it in two journal entries, and let's try to think about a register to do this. Now, typically, so notice if we see this first one, what register can we use? Accounts receivable, sales tax payable, those are both balance sheet accounts. So we may be able to use one of those. Now, they're both kind of tricky accounts because accounts receivable has a customer amount added to it, so it might be a little tricky to do. We'll take a look at it. And then the sales tax payable, you got to track the sales tax payable. They got the sales tax payable feature for it. So those two could be a little tricky to deal with, but let's go into those registers and take a look at them, see if we can enter this in terms of the register balance going up and down. So I'm going to go back to the first tab. I'm going to hold down Control and scroll down a bit. We're going to go down to the accounting. And if you want to see the debits and credits, by the way, of course, when we open up the report, it'll show the debits and credit journal entry because we'll still be entering a journal entry as well. So we're looking for the accounts receivable. So we're looking for accounts receivable. We're going to open up the register for accounts receivable. And then I'm going to select the drop down up top. And you'll notice they don't even allow me to enter. There is no drop down for accounts receivable. So they won't even let me enter something to accounts receivable in a form format here, or even the journal entry entered here. And that's because it's basically trying to force us to have the customer. So let's try the sales tax. Let's go down to the sales tax and say, all right, well, what if I go to the sales tax payable down here, which is going to be a other current liability, where we have the sales tax liability. Let's try opening that register up. See if we have better luck getting a journal entry. So we do have a journal entry form up top there, so we can go, all right, I want to enter a journal entry. Now I'm going to enter this as of 02/28/20. I'm not going to put a payee here. The memo is going to be an adjusting entry. And then if we look at the sales tax, we're looking at this item. It's going up by the 123.5. So it's an increase of 123.5. Now the other side is like, well, we have two other accounts affected here. And we don't have the little split option the way we typically have in the desktop version. So I don't see anything that says split here. So what I can do is I can say, all right, well, let's put the other side to sales for now. So I'm going to put it to sales, and it's going to be sales of the product or inventory. I'm going to record it, even though that's wrong. It's not what I want. And then I'm going to go back into it. So I'm going to say save it. And so there it is. Here's our journal entry. And I need to add another account. So what I'm going to do is just say, go to the split item here. And then and then I'm going to open up the editing of it. I'm going to edit it. These options of editing weren't there before. Now they're there. And I can go into the edit feature, and that will actually open up the actual journal entry. So now I can say, oh, okay, so here's the full screen for me to do a journal entry. And then I can go back in and say, well, let's just do the whole thing. Start it over. I'll say this is accounts receivable now that I have a journal entry open. And that's going to be for the full amount of 1423.5. 1423.5. Adjusting entry. We have to have a customer. And you'll recall from the prior presentation, this invoice went to Anderson. And you might say, well, why do we have to have a customer? It's because QuickBooks is forcing us to tie out the subledger, which is the customer detail for the accounts receivable account. And so they won't let us record it typically if we don't have a customer. So anytime you hit accounts receivable, you pretty much need a customer. Then we have the sales tax payable, and that's going to be should be a credit. So sales tax liability is going to be a credit of 123.5. So it's going to be 123.5. And this, because they're using their little function here, may need a vendor. And that vendor is going to be the California Department, and so on and so forth. So we'll keep that as the vendor. And then we're going to have the sales of the product. Sales of product income. That's going to be the 1,300. All right. So I'm going to add the adjusting entry all the way across. So there we have that. Okay. That looks good. That's the first half. So I'm going to say save and close. And before I go review it on the financial statements, I'm going to record the other half and try to do that with a register. So I'm going to go back to the register, to the chart of accounts, I mean. And then we're looking for inventory. That's going to be an asset up top. So I'm looking for the inventory asset. Here it is. I'm going to view the register, go to the register. And then I'm going to do the same thing. I want to select the drop down, and I'd like to see something for a journal entry. I want to make this a journal entry because I want my adjusting entries to be in journal entry format, even if I enter them into the register. So I'm going to put that here, and I'm going to put this as of 02/28. Now the inventory account should be decreasing by 1010. And the other side, I already recorded this. I kind of messed it up and put the other side in there to the wrong account. So I'm going to go back into it and I have to edit this. So we're going to decrease here. We're going to be decreasing. The other side is going to be going to the cost of goods sold account. But I'm going to do that by going to the edit. So we're actually going to see the journal entry. You have unsaved changes. I'm going to say yes. We're going to then go into the journal entry. So there it is. We have, it should be the cost of goods sold on the debit side. So I'm going to say cost of goods sold should be the 1040. And then the credit is going to go to the inventory. What happened there? Inventory. So there we have it. And this will be an adjusting entry. I'll put that on this side as well. Now note what we're not doing here on the inventory. We're not recording an item of inventory. So that means that when we record this, it's going to be adjusting the account, but not the related item. And therefore, the amount on the balance sheet for inventory will not reconcile to our inventory report. That's okay because we'll do a reversing entry and fix that. Now, note that when we do that with the accounts receivable, it's similar to the accounts receivable. Typically, QuickBooks will force us to use a customer. You'll note they didn't even let us use the register, just in case we might not add a customer, I guess. I don't know. But we couldn't enter, so that, and they do that so that the customer balance detail will tie out to what's on the balance sheet. So here we're going to be off, as we'll see, but that's okay. It'll be back on once we do the reversing entry. So I'm going to say save and close. And then let's go back to our reports. Let's go to the balance sheet and see what happens. I'm going to go back up top and change the dates from 01/01/20 to 3/10/20, then run that report. I'm going to hold down Control, scroll up to get up to that 125, that's where we like to be. And then we're going to open up the accounts receivable. So I'll open up the accounts receivable, scroll on down, and we'll see that journal entry on the 29th. Now, if yours is on the 28th, I think I entered it in as a 28th, and then I changed the date. So you can, if it's up in the 28th, I should have put it at the 29th because there's 29 days in 2020 in February. So you can always go back in the journal entry and adjust the date to the 29th. You want to have all the adjusting entries as of the 29th. Closing that back out, the other side is going to be in the profit and loss report. So I'm going to go back to the profit and loss. And I'm going to see this, let's keep it all the way up so we can see the cutoff date on 2/29, and then the actual invoice is going to be entered in March. So we're going to go to the sale of product item here, sale of product item. Scrolling down, we see the journal entry. So here's going to be the journal entry for the 1300, making it correct as of the cutoff date, the 29th of February, and then it gets entered twice because it's going to be entered as of March 10th after the cutoff date. And that's okay because we're going to do a reversing entry to solve that double entry problem as of the 10th. We're making the financials correct as of the end of February at this point. Then the difference is going to the sales tax payable. I'm going to jump back over to the balance sheet. That's a liability account. We have the California department. That's where it's been going. We also have this other account we set up that's basically a contra account to this one at this point. So these two would then tie out for the sales tax liability. If I go in there, we got our adjusting journal entry for the sales tax. So then I'm going to go back up top. We also know that the inventory is going down. So if I go up to the inventory account, then, and you'll notice there's two inventory accounts. I'm not sure why QuickBooks set up two inventory accounts, but let's go ahead and match this thing up. I put it into inventory. It should go into inventory asset. So I'm going to open up this one in inventory. I'm going to open up the journal entry here. And then I'm going to take this to inventory asset. So inventory asset. So let's do that, make that adjustment, and then I'm going to say save and close. So then if I go back up to our report, then we have the one account here for the inventory asset. It's at a negative balance because well, we'll see in a second. But if I go in there, we're going to scroll back down and we'll say that we have the journal entry here, which will make it correct as of the cutoff date. So that's going to make the balance correct as of the cutoff date. And then it's going to be negative because it's in there twice again. And that's going to cause us a problem. We'll do a reversing entry to fix that as of so it'll be right as of March 10th. So then we're going to go back. The other side's going to be on the P&L, so it's going to be in the cost of goods sold. So if we go into the cost of goods sold and scroll down, then we have the adjusting journal entry here. So the adjusting journal entry is included, and then again it's in there twice as of March. So the bottom line is, what we're concerned about here is that if I make this P&L go to 02/29/20, our cutoff date, then we now have included in the sales item that's sales, but we put it in there with a journal entry. So the sales and the cost of goods sold are reflected properly as of the cutoff date. We're not worried about March right now. We're just getting the financial statements. We're not worried about March. We're only getting them correct as of the end of February. Balance sheet, if I go to the balance sheet and scroll up top, as of the end of 02/29/20, again, things are correct as of this point in time. The accounts receivable is reflected correctly, what is owed to us with a journal entry, and the inventory is now reflected correctly. The decrease of inventory that has been shipped out has been decreased. Now let's take a look at the subledgers just so we can kind of see them. If I go to the reports, and then we want to open the inventory report, the inventory valuation summary report. Let's take a look at the inventory valuation summary, and let's take a look at it as of 02/29/20 and run that report. I'll close up the hamburger. It comes out to 1,712, and if I go back to the balance sheet, that doesn't tie out to the 672, and that's because when we enter that journal entry, the 672 minus the amount here minus the 1712 is the amount 1,040 that we made a journal entry for, decreasing inventory and increasing cost of goods sold, which we didn't reflect with an actual unit, an item here. So those two are off. So what's going to happen? So that's going to be off right now, and then when we do the reversing entry, we will this will basically reverse back out. So the bottom line is that our financial statements are now correct as of the end of February on an accrual basis. And then next time, and we're not worried about March right now, which has a double entry in it as we get to March 10th, because the invoice will be entered again, and we already entered the journal entry here. And then next time when we do the reversing entry, we'll fix that component. We'll reverse it, and we'll do all reversing entries as of the first day of the next month. And then as of March 10th, the two will reverse themselves out. We'll be back in balance as with the other reversing entries. It's just this one's a little bit more complex, of course, because an invoice has more components to it, more accounts that are affected with it, as well as the subledgers with regards to inventory and the accounts receivable.